Hey, good evening, guys. Um, I bring you yet another backtesting video. All right, this I want to go straight to the point. I don't want these videos to be too long. Yeah, so this pair is Crash 900 index, right? We're about to backtest it, but I'll first give you some intro. One thing you know about this Crash, unlike just like other synthetic pairs. They don't, they are not affected by news. They are not manipulated by news or any form of news event. No, they move 24 hours of every day. You get Saturday, Sunday, they are moving. So, but there are some key things you would know about crash indices. So I'll just give you a few and I'll I'll make a video, a comprehensive video explaining crash indices, right? And that video will be found on my Instagram, right? So, but first of all, key things you should know is number one is they move normally most of the time. Sudden, they just have sudden, experience sudden sharp bearish move or bearish spikes, right? Then they return back to their movement. They're actually created they are actually designed to trend upward, but while doing that, they experience sharp spikes to the downside, very spike. This is why they call them crash. While going uptrend, they experience sharp, very spike. So, but it depends on the trade or the pair of crash indices that you're using because crash indices differ. They have crash 300 indices, crash 500, crash 600, crash 900, and crash 1000. What we're looking at currently is crash 900, right? The number represent the number, this 300, 500, 600, they represent the average number of ticks before a crash happens, right? So crash 300 is like after every 300 ticks, you have a crash. After every 900 ticks for crash 900, after every 1000 ticks. So the more the number, the bigger the number, the lesser you would have a crash happen. So if you're trading the crash 300, just know that crash might come in or will come in every 300 ticks. There are ways you can find out the ticks and all that, but I don't want to go into all of that now. This is a backtest video, and I want you all to just have this in the back of your mind. This market do more crashes, do more of an uptrend, but crashes after every 900 ticks. There are ways you can actually Google to find out how to get your ticks, and I would let you know in the educational video. But for now, let's backtest what happened last week. If we were to take this trade, so at this point, this two yellow line indicates last week, right? So at this point, first of all, from a daily time frame or perspective, you draw out your zone. We see a zone here after these first two ticks, then we'll draw it out. If you notice, this is a zone is always after the first two, then the rest is also good. So take for instance this one. After this one, hit, break, come back to tap on the same area. You draw it out. If you draw it out, you notice other places price respected, like here, let me use this. Okay, like here, like here, like here, and coming back like here, like here, like here, before we had the break and retest before this week came in. So before this week came in, aside break and retest, we know we are already on in an uptrend right from here, this point. Market has been doing consecutively more highs and more higher lows. Okay, so more higher highs and more higher lows. So our market has taken out this high here. And before this week, market took out this high. This is why you see me put a break of structure line there to indicate that that was where market took out from. So we're looking at what now made the market, where we would have, if we wanted to trade this market, where would have been our point of interest to trade this market following it back up. So one thing you would know is there is a zone above, so you be careful not to trade above the zone, not to hold trade above the zone. Except you see a break and retest, then you can continue, you can get in again on a very good entry, right? But once there's a zone above, make sure you're careful not to take. But at this point now, market is bullish. Market is bullish at this point. So we would, if this market was to come down, we'll be needing market to come down between this high and anywhere between this low. So we'll first draw our range, our trading range. Trading range will be, let me put this in the line. Trading range will be from here, because this was the low that we got, right? Yeah, from here up until this point here. Yeah, so it is from here to here. That was before this week. Okay, I could just say from here to this point. But before, remember we map out these things when we see after the full movement is done and we see the first reversal. That's when we map it out. So this point is a good point, although that's where the day started. This was where the Monday started and Monday ended here. But it's a good point to put your trading range, the top trading range, right? So we have this whole range to trade. We now have to break it down to see where market is going to come to. Already we have an order block that instigated that bullish move up there. This is the order block. Yeah, sorry. This is the other block that instigated that bullish move up there. Let me change it to, yeah. Yeah, so, and it was on a daily, time frame. Yeah, D1. So, but we're not looking at this market trading on daily because our target is here. Before we see a break of structure on a daily, it's going to be a while. So we break it down to a 4 hours time frame to see if there were places markets did a break or retest. So I'm going to just adjust my break of structure point, right? So after adjusting it, we see this order block here before the break, which caused the break. We see this other block here. Market came all the way. If you notice how markets came all the way here, this is the other block. You would have mapped it out though, and see how market came all the way and invalidated it without giving you, because already market has cleared this point, right? Then, but at this point now, market was supposed to just let you just keep going up or something because it's already inside the order block. But market created a trend after it broke off from this point. It created a trend. So our main goal is to probably wait for the market to give us a good sign of a break of structure since there's a trend. But then this order block has been invalidated. So that before the other block, we had something here. We had, we had a fair value gap area here just before the other block. We had this fair value gap area here. Yep. Yeah. So that's on 4 hours. I'm going to put it 4 hours. Yeah. So this was the kind of like the fair value gap area on this point. So at this point, so you see, as market invalidated this one, you would have also put another this thing here too. What do you call it? Another order block here. There's another block here before this mid little break. You know, this was a high that market took out, and this order block and this fair value gap was what created or caused that high to be taken out by the market. Okay, so at this point, this order block and this fair value gap is valid because we see that it caused a break of structure. Just like this one, it's also valid, but market took it out on liquidity. but then it almost took out what do you call it, our fair value gap. But you know, at this point, we're not supposed to enter this market until we see a proper break of structure. Why? Because it created a trend here. Because it created a trend, it trended down for at this point. So at this point, we have a trend. Market trended here. What I mean is, this is what I mean. Market came here after from the range, right? Created a high, then the trend has started, right? So from here now, market is trending. If you just came here and reversed, keep going, then it's not yet a trend, right? It didn't trend down, it just went straight. But at this point, a lot of people would have even bought this market from here. But I would have not, in the case whereby this is why I wouldn't have bought the market. I saw it, it is tempting, but this is why I would not buy the market. I'll show you quickly. I always want to trade the market to make sure it closes above, like for example, this one now, once it touched, I'll make sure it closes above, back above, like let it close outside the structure, outside the outside the fair value gap structure or the order block structure. Let it close outside it. But if you notice how this one didn't close outside it, it just came and it's still within that same point. So it's already it's not in my trading plan. It's not in my trading tactics to take the trade if it doesn't close outside. So I'm looking for the trade to close outside. So already this came down and gave us a trend. So now my bias has shifted. I need a break of structure before I would take this market. Else I'm not taking it. So what we had was here, market did something like this. Sorry, I'm having a little bit of, I think I'm tired. So if you notice how market did this, came back up, did this, broke to the low again because this is a trend, then broke above. You see how market, this, I wouldn't call this a trend, but you see how market broke above this high here. So it has broken a structure, it has broken a structure here. It went all the way to this point, to this weak point here, to tap on this, right? So, but then what I would now be looking out for is, okay, let me see market coming back to anywhere between this point and this point. So on 4 hours, I have a range, a trading range on 4 hours, which is between this point and this point. And we are still inside the area, right? So market still did play back down, come back here. Notice how market also created another trend. Why coming back from this point? It created another trend, came down here, went and broke the trend by doing this. You see? And took off the trend. Yeah. So you see, it broke the trend by doing this. It created a low, went back high, and closed below the trend. But see what now happened next. We see a sweet engulfing after it tapped in on this um, um, fair value gap area on 4 hours. It gave a sweet engulfing close above that point. So if I had seen above this high, this is a high. So if I had seen this break of structure that closed below, above this point with this candlestick pattern, I would have actually taken the trade from here. But I would have made sure any trade I'm taking is 1:2, 1:3. To this point, it will not exceed that. I assure you, I wouldn't want to take any trade above this point. So I wouldn't want to hold my trade above that point. If it wants to go there, fine, let it go. If it's not going there, then it's fine. I'm out. But that is it. So if you notice at this point, we already had a 1:2, right? Then it gave a retracement and came back and gave you the sweet 1:3 pair that you're looking for. Well, anywhere around here is cool as long as it's 1:3. Anywhere around there is cool. You could still bring it down. Why is this thing not okay? Yeah. So you could still bring it down a bit to look for where is your 1:2, 1:3. Yeah. So this was where we had our 1:3 at this point. So if you notice, Market just gave us exactly what we're looking for, broke the structure of what we're looking for, which is part of what we're looking for. So if you follow my other videos, you will see the rules. I wrote down the rules. I don't want to start copying the rules again, but then make sure that rule is based off of entry. It is not your overall checklist, right? It is not your overall checklist. Every day I do a backtest here, and most of the thing I do on backtest here is my top-down analysis when I want to look at the market and what I expect and how I view the market before I enter a trade. So this is all I do before I get into a trade. I look out for, has it broken a structure from a higher time frame? Is it trending towards that point? Is it okay? Where is my areas of interest? Where are my trading range? A lot of things are involved, but most of these things have to be catered for in top-down analysis. So this is why you do backtest. So you get to understand where market has been or what market has been doing over time, right? You get to understand what market has been doing over time. So I hope this blessed you. I hope this made a lot of sense. Drop a like, drop your comments. If you have questions to ask, please drop your comments. I'll go through the comments and I'll reply you. All right. And also turn on your bell notification so you would know when next I post a video on here. Okay. So see you guys. Josh FX Pro signing out.